hello, Maverick traders. It's the 29th of August, if you can believe it. Jeez Louise, we're finishing out this month. Boy, this week, it's Tuesday. I think the month ends on Thursday or Friday, and we are going to be back into fall trading, back from the holidays. However, I truly believe that this was the last-ditch effort of a summer trading week. Well, so far we're in the middle of it. Let me give you my 2 cents. It is my 2 cents, so take it for what you will. Take responsibility for the outcome. You guys know the drill. Let's jump into the markets. I'm going to break these markets down into meaningful news of the day. I'm going to take a look at the charts and see if we can't find something to where it comes to sentiment, up, down, or sideways. And I'm also going to end it with sharing some trades from the community here at Maverick with trades to the bull side, bear side, and sideways. So let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Moving into the market analysis, guys. It is a strange one, but kind of expected when it comes to summer trading. And we are on the cusp, or I should say the tail end of the summer markets. Before I get too deep into it, let's take a look at the daily news. The indices make a strong push higher through lower highs, led by comm services and tech. Big surge in crypto today with rates slipping. Signs of an expected soft landing and dovish Fed. Now, I read that all at once because we had the symposium in Jackson, and Powell came out and said that he wasn't going to be dovish at all. He said he was going to actually continue to monitor inflationary gauges, and he was going to take, he's going to take the necessary steps. The markets, however, took it as dovish. And the reason why I'm saying this is because we're going to get into the charts here, because we had a pretty good move to the upside. We're not super bullish yet, but the last few movements have been to the upside. How do we finish? The Dow, the S&P, and the Qs all up, and pretty substantially. 1.75% on the Qs, 1.5% on the S&P, and about 1% on the Dow. So, what has been leading this charge since March of this year seemed to rear its head. And I'm taking a look at this, and I'm only going to take it with this. It's just this last little ditch effort of, okay, it's been working, let's jump back into it. It's a complacent market coming into the end of the summer. But when it comes to a pattern, I'm seeing something very, very different. We'll get there in a second. The Russell's still up 1.4%, oil up 1.36, and gold just off of 1%. How else did we finish when it comes to advanced decline line? It was a nice, bullish, strong day. You'll see the candle here in a minute. 78% advancing, 18% declining, 4% flat, above, below the 50-day moving average. Regardless of the surge that we had today, 57% of stocks are still below their 50% moving average, and 43% are above. It is one day. We might get this 1 or 2 or 3 more days. If we can get this the rest of the week, then I'm going to seriously ring a different bell or tell you guys a different story. But if this fails, or is just indeed an oversold bounce, then we might be doing something a little bit more ominous, right? That's how these markets work. So into the charts. This candlestick is something that I'm just going to tell you guys personally, I did not expect. I was not expecting this at all. I perused through the news, and there's nothing to warrant it, except for the fact that there's no quote-unquote bad news. So we had this beautiful bearish engulfing candle. I believe the last time I talked to you folks was right here. I love this gap and move lower. This is called dark cloud cover. One of my favorite bearish candlestick patterns, but it does need to be confirmed, and it did not confirm. However, we did get immediately, a little bit later, was this awesome bearish engulfing candle. Take a look at this bad boy. Huge move, big range. The volume was decent, but it was met by this buying. And I'm not sure if this buying is just an oversold bounce, if this is a last-ditch effort to catch the bottom, quote-unquote, or hey, let's get in there and buy some of these oversold stocks that we believe still have a hope. I'm not sure. I don't speculate. I just follow price action. But after this point, okay, I knew that we would get a little bit of a push higher. Today's candle, for me, did cause a little of a situation when it came to some of the bears I wanted to trigger that I just stepped away from, and I'm just not going to pull the trigger on them yet. We have the 2050 crossover, which, let me illustrate this here. I've got the 2050 crossover. I've got a beautiful pivot that was broken. We'll see how far this goes, but we are still technically well above or well below a pivot level. It would be interesting. It would be nice to see it pivot here when it comes to a very consistent pattern to the bear side. But today's candle with this volume just seems like a little bit of a covering or a last-ditch effort. Let's see how we close the week is what I'm really going to focus on. That being said, I'm going to stay pretty neutral. I'm not going to bend any of the bears I have or the bulls I have. I'm just going to let this candle kind of play itself out because that's pretty exorbitant based on the pattern that I have in front of me. Let's look at the Qs. You're going to find that it is very similar. It's interesting to see as of late, as of what we have when it comes to some of the earnings announcements, some of the companies that have been, I don't want to say abandoned, but NVIDIA came out and just blew the numbers out of the board, and they're just kind of chomping around. They didn't really break out into new highs. This is a stock that's up over 200 to 300% in the last few months. We didn't see that. So is this a little bit of a short cover rally? Enough to break this crossover, this huge bearish engulfing candlestick pattern? Just a kind of a last-ditch effort. I mean, we're still up in this range, but I just don't quite buy it yet when it comes to flipping to neutral to bearish to completely bullish. Today is just not the day, even though the candle does create the argument. Now, as you can see, of course, everything participated. Here's NVIDIA, 4.16%. This is a company that announced that they blew out record numbers, the best they've ever done. They projected to be great, and they didn't move 200% like we saw in the last few months, did they? They're kind of hanging around the mid-level. So, yes, lots of bullishness, lots of last-ditch effort. I'm going to call it right now. Tesla, look at that, almost 7.75% for heck's sakes. We'll see. It's one day. So it's difficult to manage when it comes to making a decision. And this made it really difficult, folks, when we get to my choices, because nothing really did anything for me. So my monthly outlook, let's break it down to what it is. Above the 20, above the 50, the 20-50 slope crossover. It's a lower high. It's descending. The best I could do for the week was a +1. And I'm going to tell you folks right now, that +1 is 100% today's candle. If today's candle did not exist, this would absolutely be a -1 or a -2. I'm looking at the volume that is decreased. I'm looking at the price action after a crossover below the moving averages. If it wasn't for today, I would seriously be at a -1 or a -2. But today, I have to honor my top-down approach, and I'm at a +1. Reluctantly. But that's okay. I don't have to trade my opinion or my feeling. I'm trading the markets. Now, on the monthly outlook, yeah, sure, it's a crossover. The slope's red. Everything else is bullish, but we are still well below this high that we set last month. So I'm going to go flat on my market outlook. Now, what's great about this, folks, and this is why we love having a weekly outlook and a monthly outlook, is because we don't want our weekly outlook to change our longer-term positioning. Okay, this could be an anomaly. Hey, I could be wrong. We could be breaking new highs in the next 2 days. Fine. I can change that on my weekly outlook in the matter of 2, 3, 4 days. But if this candlestick fails, if we get a gap down or it's a big red that just kind of knocks it out, I have done nothing to really hurt my portfolio in the short term. So let's go to the potential trades, folks. I apologize. I'm carrying these forward from the community, from what I had the week before on Tuesday, from what I get from the updates from all of the members here at Maverick from day to day to day. And there's just not much going on. I've got the same bulls, the same sideways, and the same bears, and nothing's really exciting me. I think the one that I got the most excited about was Visa. The reason being is because it does have this ascending pattern here. and it does look like it could break out, or like it wants to break out. Let me draw this line. An ascending triangle pattern going on. It's kind of confirming. Sure, if this is something you believe that this is the beginning of what could be a pretty good substantial move to the upside in the markets, I think Visa is where you want to be. Diagonal spread, vertical spread, something protected. You don't have to go all in. That's what I love about it. If you guys want to throw a couple of bulls out there, go for it. You don't have to go all in. You don't have to put your full allotted risk into one trade with a straight call. You can do a diagonal spread, targeted butterfly, a horizontal spread, diagonal spreads, something that takes a little bit of the edge off. But it does have a very good pattern and argument to the upside. Sideways, this is OKTA, and it's been on the watch list for quite a while. Sideways, but it is. It's starting to get pretty tight, and when I see things get tight, I get a little bit nervous. Let me draw some lines here. So I think before we're talking about a range of, I don't know, 60, 68. Let's call it, 68 right here to about, 78. Boy, that's kind of wide. It's getting tighter. If you want to make some more money when it comes to the credit side of things, probably more of like a 74, kind of a 74 area down to maybe a 69.50. It's getting really, really tight, but most of the time, and I haven't checked the earnings on this or any sort of news, but most of the time when they get tighter, they tend to break out. So if you guys are Bollinger Band players, keep an eye on those. Maybe they're going to exceed a standard deviation or two and come back down. That's totally fine. So condor spreads, great. Open up a little wider. I don't know where to target this when it comes to a bias of up or down, because it is technically pretty much flat. You can see the crossover that this has had with its moving averages here, and it looks like, well, it looks like it's about to slope back over right around here. So it's getting really tight. I would do, as this gets tighter, shorter term makes more sense. So that's kind of my approach when it comes to sideways. If there's a wide range, I'll go longer. As the range gets tighter, I'll go shorter in time. But that's all I got. I mean, really not a lot to go off. I know it's only been a couple of days this week, but even carrying it across from last week, these markets are just kind of trying to find out where they're at, on top of which deal with the fact they're coming out of the summer. But we just don't have that oomph there, or that any sort of conviction and direction from either the bulls or the bears. And I think it's because we're into the late summer. So we do have a strong move above the resistance, but it's just one day. It's just today's candle. I don't see a lot of buying there when it comes to the volume or any conviction. We'll see what happens the rest of this week. So still too early to gauge for me. Home prices were still high in some major cities, down 1.2% versus expected down 0.15%. Now, don't get me wrong, folks. Home prices are coming down, but not in the major areas that the demand has always been high. We've seen a huge move from both coasts into some of these other regions, and those markets haven't really even slowed. Yeah, interest rates are higher. Yeah, mortgage loans are lower, but cash purchases and house prices are not coming down in the demand areas. So we need to take that and think about, okay, does this mean that inflation is still at the higher end? We have a bunch of numbers coming out: ADP employment, GDP revision, the PCE, U.S. farm or U.S. non-farms, unemployment, job claims, manufacturing. We have a whole bunch of stuff that's coming out. I believe if these are high, if these come in the higher end or the expansion area of their numbers, then you might see what Powell said over the symposium at Jackson, saying that he needs to stay ahead of it. This might be a little bit more than a soft landing. This might be a little bit of a aggressive economy that's not slowing down. Maybe they didn't get ahead of it enough. That's my 2 cents. We'll see how the markets react. Earnings reports, we're winding down. We have HPQ, HPE, same company, by the way. It's Hewlett-Packard. Hewlett-Packard Incorporated and Hewlett-Packard, the company. Both, by the way, one's down 5.8% right now. The other one's down just shy of 1%. We've got Salesforce and Chewy both out tomorrow, but it is winding down. And I believe these markets, based on what I see, the markets really aren't rewarding good news. That NVIDIA news was probably the best I've ever seen, but it was well then priced in. We know that by watching it over the last few months. A 200 and something percent move to the upside. Yeah, of course it was priced in. So a little bit of reluctancy to buy into it moving forward, but it's not falling apart. So we just need to see what these markets want to do with some of this news. It's going to fade away. We're going out of the summer. It's going to be pretty interesting to see. So just take this for a grain of salt, folks. Just make sure you don't make any drastic changes when it comes to your overall portfolios. We are still basically sideways to negative. We did have a pretty good sell-off over the last couple of weeks. This bounce or recovery is to be expected. I just don't want you guys to go +3 or +2 right now when we're just having what could be an oversold bounce. My 2 cents, folks. We'll talk to you next time. Thank you for joining me. Bye, folks.